A key component of human life is enlightenment, the awakening from the darkness of deception into the light of truth. The so-called Great Awakening has really been going on forever, and before MAGA and QAnon, the consensus was that the banks were at the top of the criminal pyramid structure. And while many of us assumed that a hidden hand was pulling their strings as well, we realized that their main goal was a digital currency and a cashless society. It was the subject of several documentaries.
The ultimate goal that these people have in mind is the goal to create a one-world government run by the banking industry, run by the bankers, right? There'll be no more cash. And this is getting me straight from Rockefeller himself. This is what they want to accomplish. And all money will be in your chips. And if you're like me or you, and you're protesting what they're doing, they can just turn off your chip. And you have nothing. You can't buy food. You can't do anything. It's total control of the people.
And that chip's connected to a database that has your purchasing records, what you do, what you sell.
Everything is in there.
And it was also commonly discussed that they'll likely use Big Pharma to get us there. But now it's as if everyone has just accepted it and found something else to fight about. Because the cashless society is being rolled out right now, and very few people seem bothered by it. In November of 2019, right before COVID, the Institute of Politics at Harvard Kennedy School had a live tabletop exercise called Digital Currency Wars, which looked at how the United States can continue to leverage economic power in a world of national digital currencies, such as the Chinese digital yuan, which is already heavily competing in trade against the US dollar and seems to be at the forefront of centralized digital currencies. And it has an expiry date. If you don't spend it by then, it becomes worthless, so people can no longer save money. The Bank of International Settlements has announced that the central bank will have absolute control on the rules and regulations and will have technologies to enforce it. The Central Bank of Brazil is planning to launch their centralized digital currency in 2024. Israel is about to launch theirs, and the Bank of England is now preparing a UK digital currency. Italy's new Prime Minister, Meloni, is speaking out against the cashless society, but she seems to stand alone on the world stage. In the Federal Reserve's digital currency scheme, it appears that Hedera and Quant will be used on the technology side. They are already connected to everything. The cashless society is here, but everyone is talking about Hunter Biden's laptop. The tyrants are still getting exactly what they wanted. And once it's all said and done, then who will save you?
And if you're like me or you, and you're protesting what they're doing, they can just turn off your chip. And you have nothing. You can't buy food. You can't do anything.
But it doesn't matter if you are a political activist or an obedient sheep, because the banks are planning on taking all of your money to pay off their debts.
I mean, it's a little bit conflicted, right? I mean, it's important that people understand they can be bailed in, but you don't want a huge run on the institution. But they're going to be.
The FDIC currently has less than $200 billion in assets to insure over $9 trillion. That's just 1.3%. They know that a system collapse is coming, and they are already planning for bail-ins. As trust begins to fail, the people will begin to withdraw their funds, which will only guarantee a banking collapse. This is known as a bank run. In 2012, the International Monetary Fund, known for their reputation of coercion, violence, and extortion, published staff discussion notes entitled From Bailout to Bail-In: Mandatory Debt Restructuring of Systemic Financial Institutions. After the 2008 crisis, the world learned what a bailout is: trillions of taxpayer dollars printed out of thin air to pay off the bankers' bad habits. It was hugely unpopular, but pales in comparison to a bail-in. So what exactly is a bail-in? It is officially obfuscated with elaborate equations, but to put it simply, it is when the bank steals your money directly from your account. They called it haircuts when they did it in Cyprus back in 2013, which the courts later ruled was legit. And a recent video on TikTok shows that the new bail-ins may have already begun.
So I'm a Bank of America and everybody's missing money. I'm also missing money over $1,300 and they're telling me to call customer service. And they keep hanging up on people. This another person here is also missing money. So we're trying to see what's going on. Money's missing today and we need our money. And they're already telling us to call customer service. And customer service ain't doing nothing about it. So just a heads up, if anybody's experiencing this, please let us know because this is not right. I'm missing $1,400 from my account, and they're telling me that there's no way they can help us. This guy's missing money too. This other person is missing money too. And you missing money too? There you go. So this is not something that's just one person. This is everybody's happening to them. And this is crazy. This is very crazy. Yes, Bank of America decided to take people's money without their consent. And we're asking what's going on, and they're giving us a runaround. Everybody for the same thing, man. Same thing.
The Fed's been operating its monetary policy while looking in the rearview mirror because they keep creating inflation, right? Printing money, quantitative easing, whatever you want to call it. And they keep printing more and more money. And they look at the CPI. And as long as it's below 2% or some version of it, they think it's okay to keep printing money. Meanwhile, they're ignoring the road ahead. The problem is they're going to raise rates enough to crush the economy, but not enough to slow inflation. And in fact, as inflation gets worse, that's going to be another drag on the economy. And so what you've got to do, what I'm trying to tell you, is you've got to get out of all of the bubble assets that were propped up by all the cheap money. Because even though money is cheap, it may be slightly less cheap for a while, and that's enough to collapse the bubble. But you can't just go to cash because inflation is very high in bonds. Bonds are even worse than cash because it's cash in the future, but in the meanwhile, you're tying your cash up and inflation is eating it up. I think the balls are already in motion because, we had this big increase in consumer prices and prices were up 7%, maybe a little bit more. That would be the highest rate, I think, since 1982-ish. But, if we still measured prices the way we measured them in 1982, we would have, reported about a 15% increase in consumer prices, which would make it worse than any individual year during the 1970s or 1980. So this was a horrible year of inflation. And I think this is, really the beginning of the end, because now the Fed can no longer justify 0% interest rates and quantitative easing. It needs to raise interest rates, and it's now talking about raising interest rates, and it may in fact raise them. We'll see. It may not just talk, it may actually do it. But the problem is even the rate hikes they're talking about are too small and too late to make a difference, because the Fed is talking about raising interest rates. Well, we got 7% inflation. You can't raise rates 1 or 2%. Rates need to be higher than the rate of inflation if you want to slow the rate of inflation. So interest rates need to go, 10%. But of course, we can't even get near 10%. We can't even get to 5%. We have so much debt because of all the past money printing and all the stimulus of the Fed. They have created a situation where it's impossible to fight inflation, and so they won't do it. And that's going to be the seeds of the next crisis, because as the Fed is tightening up on its monetary policy to make it less loose, right? We're not going to have tight money. We're just going to have money that's less loose than it was before. The problem is less loose is not enough to sustain the asset bubbles, in a lot of these financial assets. So we get a crash, but it's not tight enough to actually bend the inflation curve. And so inflation is going to keep getting worse, even as the Fed is hiking rates supposedly to fight it. That's going to lead to stagflation. That's ultimately going to cause the Fed to reverse course and start easing again, even though inflation will be worse than when it started its tightening campaign. And somewhere along the way, the markets are going to wake up to this reality, and the dollar, or the bottom rather, is going to drop out of the dollar. And then we're going to have a currency crisis that will morph into a sovereign debt crisis. And then it's all over. Then we have a real collapse, because then the Fed has to let interest rates go way up and everything comes crashing down in a much more spectacular way than 2008, except nobody gets bailed out. Everybody has to suffer the losses in their entirety, and they'll be much bigger. Or they don't have the guts to do that, and they just keep printing money anyway, and they print the dollar into oblivion, and we have hyperinflation, which of course would be even worse. So people have to go out of these risky momentum stocks into value. And what we're seeing is a massive shift out of U.S. growth stocks to international value stocks, stocks in Europe, stocks in Asia, basic businesses that have real earnings right now, that pay good dividends right now. That's where investors are hiding out. That's why you're seeing some of these stocks up 10, 20% on the year with no news, even as U.S. tech stocks are cratering and all the bubble stocks, including the cryptocurrencies. All that stuff is going down. You got to get into real assets. You got to get into value. You got to get out of paper, and you got to get out of U.S. paper in particular, because we've got the biggest inflation problem that we can't do anything about because we're so loaded up with debt. There's no way to fight inflation without collapsing the entire economy, because the whole economy is built on the foundation of these artificially low interest rates. But in order to fight inflation, you have to remove that foundation. And then if you do that, everything built on top of it comes crashing down. Most people, when you think about a stock market, you're thinking about the entire market, an index. I want to own businesses. I have to get out of cash. But I can't own, the momentum stocks. I can't own these, high-flying companies that don't have any earnings. And I can't buy cryptocurrencies, which have no value or no earnings. They went up along with everything else. I want to own something real. So I own businesses, tangible companies that have property, plant, equipment. What you want to do with inflation is recognize that the biggest losers are creditors, people who are owed money and are going to be paid that money in depreciated currency. So you don't want to be a creditor in U.S. dollars. So you don't want to own cash. You don't want to own bonds. You don't want to be in annuities, or you don't want cash value in an insurance policy. You've got to own real things. And that's why I'm buying all these foreign stocks, companies that pay very high dividends. I mean, I'm buying stocks some of them are trading for under 10 times earnings. Many of them pay dividend yields of 5 to 10%. I get that cash. I can spend it. If you're retired, you can use that cash to, finance your living. And as the dollar goes down, the value of those dividends will go up. And of course, the companies that I own, they're all raising their prices now. So they're going to be able to raise their prices. So they're going to have higher earnings and they can pay me higher dividends. So those increasing dividends will keep pace with an increasing cost of living. But a lot of Americans who are in the U.S. stock market, they're collecting no dividends. They just have overpriced stocks that are falling. And if they have money in bonds, the low interest rates that they're earning are completely inadequate. They're being more than offset by inflation. If you're getting 2 or 3% interest and inflation is 7 or 10%, you're going backwards every year, and eventually you won't be able to afford to maintain your lifestyle, especially if you're retired. Bonds are riskier than stocks right now. I mean, It's unfortunate because bonds are where you're supposed to go when you want to play it safe, because you're not taking the risk of the stock market. You're guaranteed to get your money back. The person who you loan the money to is committed to paying you back, and you know what your return's going to be because you have a fixed interest. But the problem is anyone who buys bonds now in this environment is overpaying. The prices are inflated because of the Fed. So you're paying this ridiculously high price for an asset that barely throws off a yield. Interest rates eventually rise, the price of the bond collapses, but meanwhile, inflation is destroying the value of the bonds, of the cash rather, that the bonds are going to pay you. Bonds are extremely risky. I mean, people talk about treasuries as risk-free return. I've been calling it return-free risk for years. I mean, nothing's safe anymore thanks to the central bankers. So you have to look at degrees of risk. And to me, I think it's a lot less risky to be in foreign equities than U.S. bonds. I think it's a lot less risky to be in gold and silver than in U.S. dollars. One of the ways you know the stock is a good value, you look at the income. Just like when you look at a piece of property and you're looking for the cash flow, you're looking at what the rents are relative to cost of operating it. If I own a business, I want to know what my piece of the profits are. What am I going to get? What's my return on my investment? Forget about potential appreciation. I don't care about that. I mean, what if I never sell the stock? What is my return on owning this stock? And that return is the dividend. It can also be capital appreciation if the company has enough income to buy back stock and deliver some of my income in the form of capital gain. So you also look at the earnings, because most companies don't pay out all their earnings in dividends. So you still are, entitled to a share of the earnings of the company when you're a stockholder, even if those earnings aren't paid out in dividends. But you look at all these valuations and you determine if that's a good place for your money. Now, fortunately, there's a lot of good businesses around the world that we can own a piece of and preserve our wealth that way. But, all of these assets are going to get increasingly more expensive for Americans as the dollar loses value. So people have to act quickly while they can still afford to buy these stocks. The last decade was all about U.S. stock market. The U.S. stock market outperformed the rest of the world because the rest of the world's got value stocks and we've got hyped up momentum in tech stocks. And so the world wanted those stocks. They don't want them anymore. They're getting rid of those stocks. And that's also a big problem for the dollar because we were recycling our trade deficits because foreigners at one point took the dollars they earned selling us stuff and they bought our bonds. But then our bonds became so expensive, the yields were so low, they started buying our stocks. Well, now our stocks are really expensive. There's nothing that we have that they want. The dollar is going to collapse. But in the meantime, we're getting into these foreign stocks. They're the ones that are going to do really well in this decade. Nothing that worked in the last decade will work in this one. It's a totally different environment. This is stagflation. And the same thing with cryptocurrencies. If you bought Bitcoin, at the beginning of the last decade and rode it up for 10 years, you cleaned up, as well as a lot of these other cryptocurrencies. What's going to happen now is it's a rotation out of fool's gold into the real thing. So now it's time to take your profits in that Bitcoin that you bought a while ago, because this is the rotation. It's out of hype into value, and that includes out of cryptocurrencies into real money, into gold and silver. It's all about value, and it's about getting out of the dollar and protecting yourselves from a real economic crisis in the United States, because it's coming. We have delayed the day of reckoning for decades now. As a result, the problems are much bigger, so we have a lot more to reckon with. It is going to be a very, very difficult environment financially in the United States. Think about the 1970s, only way worse, much higher inflation, a much weaker economy, and we're starting from a much more vulnerable position.